Hey, what's going on everyone? Back with another Elliott Wave analysis for Bitcoin. In this video, I'm going to be discussing the continuation and the pullback scenarios that we have been discussing from our previous analysis and see if anything has changed in the overall integrity of the wave structures adhering to the rules and guidelines. Now, just a quick friendly reminder, make sure to hit that like button and subscribe to the channel if you haven't already. It really does help me pump out more of these videos if you guys are interested in them. Now, Bitcoin is sort of still in a limbo here, ladies and gentlemen, because we reached a very critical resistance, a few $100s off from the all-time high. Very interesting times. Right now, I think it's pretty safe to say that no one really knows exactly what is going to be happening, especially now that we may be entering price discovery. But we can still try and narrow it down as best as we can with the current macro counts, and that is what has been most successful because we found the general direction, which is to the upside, that we're looking for a larger degree wave 5 to the upside as our termination point for our wave 3, and wave 4 respectively has conclusively completed a protected bottom. Now, that with that being said, we are working for a fifth wave to the upside. Like I just said, that was being discussed for the past few months, and until we truly break this low of this wave 4, that is when we can truly create a bearish narrative, and until then we have to stick with the bullish idea. So with that being said, starting off with my first primary idea, we have a few adjustments that have been made in order to keep our impulsive idea intact. The impulsive idea is that we are basing this move as the true expansion phase, that is a strong bullish continuation with no real significant pullbacks, and to achieve it, we are building what is known as a nested 1-2-1-2 structure that builds up for the final fifth wave of the largest degrees. It's working with the 5s and 3s, and within those 5s, you're creating essentially another set of 5s within the wave 3s. So when you typically have a strong fifth wave, there are some observations, of course, to be made, which is, of course, the market inefficiencies of internal counts to occur as the parabolic expansion phase is observed, and most importantly, strong volume, which is yet to be seen. Now, if we break the all-time highs, I think that we will see a very violent breakout, but again, that is yet to be seen. And what I mean by market inefficiency is that you will typically see a plethora of adjustments to be made, like we have here. From each analysis going forward, we have to make sure that we adhere to what could be the possible termination points of our wave 1-2s, and then we make slight adjustments with the internal counts as well, and then also adhering to the characteristic of a relatively shallow pullback of the lower degree 1-2 counts. As you can see here, we have the largest degree wave 1-2, the smaller degree wave 1-2, and now the smallest degree wave 1-2 as we have here that we are currently working in. So as you can see with our intermediate degree wave 3-4 in the orange, that was the adjustment that had to be made. We had a very obscure market inefficiency where we had a sideways wave 3-4 in the orange. And it happened as a triangle, and that is why we labeled it as such, and that finished with an impulse to the upside for the internal fifth wave. Now, that is now going into what could be now our primary wave 1, and now working for our primary wave 2. So as you can see, we are running out of degrees, and this is why it's getting very interesting, because it's getting very shallow in with each respective degree, and we have to really be careful here because all of these internal counts can just be nothing going forward if we do make a bigger pullback. Now, what's important about this idea is that we do continue with the shallow idea of the shallow pullback idea, rather, where we aren't going to be going as deep of a correction. Now, the maximum current depth that we want to be looking for, especially for this move here, is that we don't want to be really going past the 61.8% for this wave 2, although it is characteristic for wave 1-2s to go as deep as this 88.6%. That is usually only typically characteristic of the largest degree of a wave 1-2. When you're working with these internal degrees, you want them to be as shallow as possible, like we had over here for that 38.2 and the 50% level, where we just kind of bounced and we just continued up, created new highs. Now, why are we continuing on with this bullish idea? It's because we're creating higher lows, ladies and gentlemen. That's just the typical nature of how the markets are seeing it, or the general markets, rather. Now, the general markets, although they are not seeing it from an Elliott Wave perspective, we as Elliottians have to apply the Elliott Wave theory in terms of what the general markets are seeing. If we're trying to create obscure counts and we're trying to validate a certain bias that we're going to be looking for a massive pullback, then that is starting to create a bias and confirmation bias rather towards, and you're trading against a possible trend. And the possible trend right now is that we have created a significant low and we are creating higher lows as we continue. Now, that doesn't go to say that we could be creating an immediate bottom or breakage of a previous low. It just means that we are creating overall higher termination points of the macro trend, and that is why we're still continuing with this idea of the impulsive idea. So with that being said, this 38.2% in between the 61.8% is going to be a very solid zone for a possible bounce with this idea going forward. I still think that we do have a lot of merit with this idea, and I think that this wave 2 is either in, or we could be creating one more low where this wave Y could be extended. So with that being said, if we zoom in even further, again, we have a lot of tricky ways of seeing this, but right now what I am seeing is this being a possible three-wave move as an ABC to the downside that had that C wave extend all the way to the 261.8%. Very, very close hitting that. I would say that's a very possible zone where that is going to be the maximum level of that C wave. We had a very nice internal five-way move to the downside. That is why I like to see this as a possible three-way move. And then we have another three-way move, 3, 3, 3, 3, that creates a very unorthodox triangle. So that's why we are seeing this as a possible range, and that's what I mean by the market inefficiency, ladies and gentlemen. It just gets a lot more trickier, but when we're trying to adhere to the rules and guidelines, this is pretty much the only way we're seeing it. This was considered a range, and that is why we are utilizing the range possibility, corrective patterns, and we are seeing this as a possible triangle. Then we have another corrective three-way move to the downside as a wave Y. Now, what I don't like about this idea is that this wave Y is really short. It didn't even hit the 61.8% of a possible common target of a shallow move of a wave Y. In terms of the partner leg against this wave W, we only hit the 38.2%, which is okay if we have a very long wave W or wave A. We usually see those sometimes, or we've seen them quite a bit with Bitcoin in the past year, where we had a very long wave A or W and then a short wave C or Y, and that could be the completed three-wave move. So we do have the possible or technicality of this being a complete move. If not, if we do break this after this time of recording, we can extend this wave Y further, and this could be completing as another three-wave move where we may be working the ABC, another impulse move to the downside for the wave C. And that should be bringing us down to that possible 61.8 or the 50% zone on that macro scale that I mentioned, where it could be around this level here. So that's what we're going to be looking for this wave 1, 2. Again, invalidation, it's not really going to be important at this point, because if we do break those levels, even though it is technically valid for a wave 1, 2 going in, we should be working with a different idea as an alternative. And that's why, unless we do break this level here, we can start working with the second idea that I also discussed in the previous idea, where we're trying to utilize the internal wave counts as best as we can. So with that being said, this is the ending diagonal idea. We have two variations, which is the contracting variation and the expanded variation. Now, this idea is still working on the basis that we are going to be creating a new high against this previous wave 3, where we create a higher degree wave 5. Now, the overall target is very important here, ladies and gentlemen. The general direction is what we're looking for. It's not about how far of an ambitious target we can be achieving. We want to be achieving the minimum achievable goal, which is creating a higher degree wave 5 that is technical against this wave 3, and then this breakage above here, anything above here is all going to be pretty much all fair and game from there, ladies and gentlemen. It's just going to be how far it's going to be going at that point, right? But if we do find the signs and signals of possible three-wave corrective moves like we have here, where this ending diagonal is being created as a series of three waves with zigzag families, then we can really get an idea that this may not be as an ambitious target that we have for the impulsive idea. We'll get really good, clear signals and signs, especially with the severity of the type of pullbacks that we get. So with that being said, if this does turn into an action area wave, which could be the wave A, we can be technically be working in a wave 4. Now, I have been getting DMs in the past few days where are we still possibly in a diagonal idea where this could be a wave 5? Meaning that, is this a diagonal where we have this as the termination of 1, 2, 3, 4, 5? Originally, we had this idea as that, where we had this overshoot level here where wave 3, 3, 4, 5 has ended here. Let me actually draw that out, where we had this as a 1, 2, 3, 4, 5 as the original expectation, but it went up, and it went up by quite a bit, and this broke this level here as well. Most importantly, this wave 5 is now longer than this wave 3, so this is very important. Now, you can use the argument against a linear versus log scale where it is valid on one but not the other, but at that point, you're kind of playing with fire, ladies and gentlemen, to assume that a wave 5 could be ending already here as an ending diagonal, or even a leading diagonal where that is. But again, the overall expectation of breaking this previous high is a lot higher than it is to have the correction end here and we go for a massive bear market here. That would just be very strange, and that in itself is a market inefficiency. However, the distribution characteristic right now is kind of pointing toward higher levels because we did create one higher low, one high, and we should be continuing the overall trend if this is a possible termination point of a wave 4. So that being said, this wave, the only adjustment that we can be making is a possible 3-wave move as a wave 4 here, going back into barely possibly the termination point of wave 1. We go back into the territory of wave 1, and anything further, that would be creating a parallel channel characteristic of an internal degree of some sort, right? So with that being said, if that's the case, let's say that we don't get supported. Let's say that this level of a distribution here doesn't get supported. That idea could be turning into what could be possibly an expanded ending diagonal. Now, I like this idea, even though a lot of Elliotticians don't like this idea or approach. It's just due to the fact that it's a very rare pattern. But I have seen this very often when we're talking about this pattern in itself. Bitcoin absolutely loves to do these kinds of things. They love to create these distribution patterns at the end of a phase where it breaks the previous high, fakes it out, and then comes back down. But we create a wild volatility range in between. And when we saw this here during that January run, or that January dump after rather, where we saw an expanded diagonal of an ending diagonal variation happen here. And it all happened in a fashion of 3 waves. And that created a very extreme high. And then it came with an extreme pullback on a smaller scale. That is what it could be typically kind of assumed as well on a larger scale as well for Bitcoin. And that is kind of also in fractal in nature with our previous bear market, where we created a previous high, then went ultimately into that bear market where we created a huge move to the upside, broke that previous high, and created a distribution zone, and then we went back down. Now, that would be my expectation in terms of both of these ideas for the ending diagonal variation of both the contracting and expanded variation. But if I had to choose between the two, I would say that if we're not going to be supported here, this idea is going to be remaining the same. I think that we will still have a protected bottom of this here as well, this wave 2. As long as it doesn't break this wave 2, it's going to be a valid expanded diagonal variation. Now, what I like about this idea, however, is that the internal counts just fit a little bit better, meaning that we do have this as a WXY. Now, everything in between just looks quite nice as fitted as 3-way moves. Now, this move here, I also like this idea because it now also utilizes not only the leading diagonal going to wave 1, but also an impulsive count that could be going into that wave 1 as well, where we're creating a distribution range for a wave 2 of the minor degree, and we're now working for a 3, 4, 5 for this wave A, and this would should be a larger ABC pullback where we're going to be liquidating all the late longers, and then we can be coming back into this zone as well, create another distribution zone, and then we're off to the races to the all-time high again. Now, could that be in store for us with the pre and post election results? We'll have to see. That is something yet to be seen. And usually with past elections, it's just volatile, in my opinion, in the first previous days and the next days. I think that's where we see the most volatility. And I think that's where we're seeing the volatility of this move down. I think there has been some shifts in the actual polls, and we'll have to see how this also turns out to be in terms of the results. And that should be kind of creating that overall narrative of the micro time frames. So that is how we're seeing it. And ladies and gentlemen, it's just a ride or die at this point. We're all going to the upside no matter what, no matter how we're going to see it, right? The impulse idea, the overall ending diagonal ideas, they all lead to the overall general expectation of higher levels. It's just where we're going to see it and how we're going to risk manage in terms of what expectations we have. I just like to see this from a more bullish perspective. There's nothing wrong with that, in my opinion. I think that as long as we're creating these nested 1-2s, then I think that this idea still rings true. And then if the ending diagonal, if you like to see this as a series of threes, which is absolutely possible, I'd like to see this idea as well, then I think that we have a possibility of an ABC corrective move, come back down, come back into this distribution range. We're already in the distribution range right now. And this could be that last move through the upside where we don't go as high. However, the overall achievement of breaking this technical high here, going into the price discovery, we won't create as a high of a move here. But will history repeat itself? We don't know. We don't know if this is going to be just another distribution range and then we come back down. We'll have to see. It's always going to be back and forth between the bulls and bears. But right now, we're just trying to keep it neutral as possible. I'm just sticking with this idea for now until we actually truly break this wave 2 of a higher degree. If not, and we do come back in a series of 3 waves, if this turns out to be a 3 wave and not an impulsive wave, absolutely easy to kind of identify that. Then we have to work with this ending diagonal idea. So hopefully that's helpful. As long as you guys get my overall sentiment of the general direction to the upside, we have been calling it since this bottom over here. That is going to be our expectation, either for this move here where we don't have an ambitious of a high or a mega high. And that is my hopeful opinion. Thank you very much. I'll see you guys in the next video. Make sure to subscribe to the channel if you haven't already. Like the video. Thank you very much. I'll see you guys in the next video. Have a fantastic rest of the week. Bye-bye.